Can you kind of set the scene for us and just a bit of background on how you've got initially into the markets, what that looked like, how that kind of transitioned into crypto, and just to kind of lay the land?
I was in investment banking and hedge funds, and then I started to try and create the world's safest bank with a bunch of people. And they said, it's a brilliant idea, it's exactly what the market needs, and you can't do it. You can't have a bank that's infinitely safer than the others. And over time, I ended up realizing that the tokenomics of this whole new layer to the internet, that is everything from value to trust to truth to money to everything. There's a lot in this technology, and I think that this was probably the biggest opportunity of all time. But what I realized was...
This episode is brought to you by Sonic, the EVM Layer 1 platform that comes with sub-second confirmation times over 10,000 transactions per second and an average transaction cost of less than 1 cent. To learn more about the countless apps that are coming to Sonic, or about the 200 million S tokens available to those building and contributing to the Sonic ecosystem, head to soniclabs.com or follow them on X at 0xSonicLabs. Thank you to Sonic Labs for making this episode possible. So this is an episode with the one and only Raoul Pal. We went through everything from meme coins to the next Solana to AI agents to a quite scary topic of why you've only got 5 years to kind of unfuck your future and make life-changing money because the AI agent overlords are coming to take everything from us. So if that sounds interesting to you, stick around, enjoy the show. Please give us a like and subscribe. See ya next time. Peace. But I'm literally just sat looking at the XRP chart and wondering where it all went wrong for me. Like how the fuck I missed that one.
Yeah, I just don't want to get into too much trouble. When you start talking about XRP and Cardano and everything else, you start getting into deep trouble.
Yeah, God. I was looking at the TikToks earlier. $1,000 XRP, like.
I know, poor people. Poor people.
How do you think that's happened? Do you think they played a blinder from the marketing, or
if you're a normie, you come on, you're trying to figure out crypto, you open an account, you see XRP, you see Cardano, you see Bitcoin, you see ETH, and really, those communities have a very focused message, and there's thousands of videos, and YouTube is the powerful kind of attention generator, and there's thousands of them. I don't know, Charles Hoskinson must do a video every day. So it's just the sheer force of it. And then people go, okay, well, this is the one, and that's it. Fine.
what about so there's two other things that I tend to look at with this sort of stuff. Unit cost per token. How much is unit buy is a thing, and then how much of a easy, simple one-liner, two-liner that anyone can kind of regurgitate when they go to the barbers or they're getting an Uber and they can like proselytize
right.
and get the message across, you know? Like try and do that with fucking Eigenlayer. I spoke to like one of the marketing guys the other day and he couldn't even tell me what it did.
No, or C, or yeah, there's a whole bunch of these that are like impossible to describe to anybody.
Yeah.
And, you know, Celestia, another one. I mean, how the fuck do you describe Celestia? I mean, great project, but it's not.
Yeah, exactly.
You need the left curve. If you don't have the left curve, then you won't have a market.
100%. So, Raoul, thanks so much for joining. I know there's a lot of, as I say, you can see by the XRP price, a lot of new market participants coming in. I wouldn't usually ask you to do this, but can you kind of set the scene for us and kind of just a bit of background on how you've got initially into the markets, what that looked like, how that kind of transitioned into crypto, and just to kind of lay the land, and then we can kind of see where the conversation takes us.
Yeah, so I was in investment banking and hedge funds at Goldman Sachs, and then running a big hedge fund for GLG Partners doing macro. Macro is like when you invest in all assets based around how they move according to the economy, right? The economy's strong, you buy certain things, it's weak, you sell things, stuff like that, plus a lot of blow-ups and stuff like crises. That was our, bread and butter. That's where we made all the money. I was lucky enough, I'd left the hedge fund and I started writing Global Macro Investor, my research service. I've been writing for 20 years now. And I was lucky enough to see a lot of what was about to happen for the financial crisis. And then I was living in Europe at the time, in Spain, and the European crisis came a few years later, where almost the governments of Europe blew up. And it was a big deal because at the time, banks were shutting down and taking people's money out. there was all sorts of bad things. Cyprus happened, and Cyprus, they basically took all money out of the banking system over 100 grand to confiscate it to pay for the losses in the bank. Having seen Lehman Brothers and all of that happen, and realizing that nobody in the financial system knew who owned what, there was a mad scramble when people went bust. It's like, I own that. And they're like, no, but I own it too. And you realize that there's leverage everywhere. It's called rehypothecation. So the same collateral is rehypothecated like 30 times. So everyone has a claim. So when somebody goes bust, you get 1/30 of what you thought you're going to get back out. And I was like, holy shit, this is a problem. And then when I realized it was going to apply to our banks too, just as normal people, I thought, okay, this is really bad. And I saw the rise of Occupy Wall Street. And in Spain, we had something called the Indignados, which was, I think it was 4 million people marched on the streets to Madrid from the provinces because they were pissed, right? People like, what happened here? Friends of mine and friends of my parents and stuff like that will come up to me and say, why didn't we know? And I tried to tell people, they didn't understand. At the time, there was no real way outside of newsletters for letting people know. So I thought I need to do something about this. And we decided to start Real Vision, which is the kind of, we started long form finance podcasts. What we're doing now didn't exist before Real Vision back in 2014. But also as part of that journey of educating people was I need to look for a solution because this is dangerous. And we work our whole lives for our savings. And if we're going to lose the whole lot, then that's a big problem. So I started to try and create the world's safest bank with a bunch of people. Stupidly hubristic thing to do. But I thought, you know what, I could do this. And we got together with a bunch of family offices and hedge fund guys. And we eventually almost bought a bank in Texas. And we had the ex-chairman of the FDIC who regulates the banks, who was going to be the chairman of the bank. We had a good setup. And we went to see, I think it was the Dallas Fed, and said, look, all we want to do is take people's cash and hold it at the Federal Reserve. No lending, no nothing, just super ultra safe. And they said, it's a brilliant idea. It's exactly what the market needs, and you can't do it. Well, what do you mean? They said, well, you'll take all the deposits from the banking system.
Oh, wow.
You can't have a bank that's infinitely safer than the others. I'm like, wow. So I was writing about this in GMI, and some of my subscribers wrote to me and said, you need to look at Bitcoin properly. I'd seen Bitcoin back in 2012. So we're now kind of early 13. And I kind of went down the rabbit hole a bit. These were the guys, Emil Woods and Chad Cascarella. Chad had started Paxos, but before that was an exchange called ItBit, Bitcoin exchange. So I started investing in Bitcoin. I wrote the first ever macro strategy piece on crypto back then and realized, okay, here was an asset we could self-custody. Blockchain is something we could build the entire financial system on. So then we know who owns what. It's a more efficient way of doing it. And I saw that in 2013. I don't know how I did, but I did. And I wrote this whole piece that became quite famous on it. And I started investing then when it was like $200. And I've been part of that journey ever since. But what happened, I said, when I wrote the first piece on it back in 2013, I said, this thing, if I just value it like gold on a stock to flow, i.e. how much we know is out there, how much comes in every year, I said it's probably worth 700 ounces of gold, which was $1 million at the time. And I'm like, fuck, okay, it's $200. I think fair value is $1 million. So let's assume I'm a total moron and discount me by 90%. It's worth 100 grand. This is the best risk reward we've ever been given. And so that was the start of my journey. Now, what I actually ended up selling out in 2017 into that big rally. I was up 10x. Bitcoin was forking. I'm like, fuck, I don't understand any of this. So I'm like, I'm out. I've made good money. It then ripped another 10x in 4 months into the end of that year to 20,000. Then fell 85%. The whole game that we've all been through. And I'd already been through one 87% correction back in 2014. So I was kind of like, yeah, whatever. And then bought back in during the pandemic into that big sell-off and, sized up a lot more in the trade. But over time, I ended up realizing that the tokenomics of this whole new layer to the internet, this whole new infrastructure layer that is everything from value to trust to truth to money to everything. There's a lot in this technology because we get confused about tokens. Tokens are just one way of valuing all of these networks being built. And I realized that this was probably the biggest opportunity of all time, which is, I'd reached that conclusion in 2013. But what I realized was everybody's future was so fucked, particularly the millennial cohort, because property prices were too expensive. They were working 3 jobs. The S&P, the markets were expensive. So their future expected returns were terrible, unlike their parents. And I realized, well, this is the one way to unfuck your future, was like, we've been given a gift. It's like a literal gift to humanity. You can complain all day about how shit your life is, but here it is. And it's a globally homogenous, fractionizable asset that works in Bali as it does in the Cayman Islands, it does in Nigeria, as it does in New York City. We've never had that before. And so everybody, because it's fractionizable, everybody can put 10% of their paycheck in. So you don't get left behind. Because what was happening, the debasing of currency to pay the debts on after the financial crisis, all the massive debts, we keep rolling them, and it requires more interest payments, and they have to keep debasing the currency. So it makes the assets go up optically. Well, really what's happening is they're devaluing the currency. And so everyone's just getting poorer and poorer without realizing it. And people are getting angrier, and politics are getting more polarized because everyone's blaming each other. It's like, it's their fault, it's their fault. When the fact is, the fault was having too many baby boomers that competed with each other for labor, investments, all of this shit. And so I realized this was the one asset. It's doing 150% a year on average, including drawdowns, massive drawdowns. I'm like, this is it. I mean, this is the one. So I've really tried to explain to people why it's so important to them.
Awesome. Do you kind of like see yourself as like one specific type of investor or one specific type of trader? Because as we were saying at the top of the show, it was, you see some people who, I don't know, I suppose Michael Burry's like the big one, right? He hits it huge with Scion on the 2007, 2008. But then like, he's a hammer and everything he sees is nail. And like, you see him kind of call in the last 500 the last 2 recessions. So how do you not kind of pigeonhole yourself when you're kind of, particularly in this industry that's very, very rewarding for taking risk, but obviously you can kind of get caught offside when you do play that game as well. It's like, how do you be flexible around like seeing new assets or even stepping outside of what initially was just Bitcoin and then venturing off into ETH and L1s, all L1s, blah blah blah? Like, how do you prevent yourself from kind of being able to see the wood for the trees, I suppose?
So what I try and do, if I'm good at anything, I'm pretty good at asset allocation. I'm not a particularly great trader.
Mm-hmm.
Now, there's some people who can trade, whether it's Kobe or Anson, whatever. But even then, if you listen to them, they actually hold a large majority as just their fixed bag, right? People don't realize that because the other stuff sounds great because you can make 50 X's, but you lose tons as well. And really, all I look for is, okay, the thesis was first Bitcoin. Okay, got that. Then ETH comes out, smart contracts. Took me a while to understand what the fuck that meant. And then I just started looking at adoption curves. This is a technology. It's all about adoption. And so I just start doing like log regression charts of these things and just look at the long term. And my thesis is tomorrow going to be more digital than today? Then keep going, right? Because this is the new infrastructure layer for a technological world. If we're going to live our lives more digitally, a simple thing is everything that's digitized goes to zero in cost and value over time. Everything, cloud storage, email, you name it. But then comes along blockchain and you create digital scarcity. So suddenly you can create value in this infinitely deflationary world. So I'm like, okay, this is a really big thing. So once you get to that point, you realize, okay, if this is the new infrastructure layer, it's not going to be one project that wins. And so once you've got your head around, it's okay to switch around assets, you're now looking for, okay, I think we don't have many years until we reach full adoption. This is the time to make real money. We've got a bigger problem coming, which is the rise of AI and the robots. And, beyond 2030, things start getting really screwy. So we've got a period now to maximize your P&L. So you have to become a mercenary to your P&L. Now, we've already talked about, I don't know many rich traders. Very few. There's Paul Tudor Jones was good. Stan Druckenmiller is pretty good, but most short-term traders don't make a lot of money. The real money is to be Jeff Bezos or Elon Musk, is just to own your stock and don't sell it. If your company's growing at 50% a year, you become obscenely rich. Well, here's an asset or an asset class that's growing 100, 200% a year. All you need to do is not lose your tokens. And then, so I just start looking at the relative charts. So I look at, okay, what's got adoption? So developers, users, activity. And then you start saying, okay, the best part of the adoption curve is early, but not too early when it's too risky. So really second cycle is the sweet spot for most of your capital. So that was Ethereum last cycle. And then it was Solana this cycle. And they were both the same. You get to the bear market lows, but there's massive activity. There's massive developers. The community is kind of unshakable. And so I look for those and then look for the chart, look for the relative outperformance on like a weekly chart, daily chart, monthly chart. Is there a chance that this is going to bottom versus Bitcoin? If not, I might as well just hold Bitcoin, do nothing, which is fine. And many people do that. So then I switched into ETH in September 2020. I started switching my ETH into Sol in 2022, and particularly in 2023 when it just started breaking out. And then I've been going further out the risk curve because there's always a first cycle group of tokens that do really well as well. Last time it was Solana, Avalanche, Luna, which didn't do very well in the end, and a bunch of others. And now we've got, it's not clear, but Sui's clearly in that, which I'm on the foundation of. So just a disclaimer. But it may be Celestia, maybe Monad when it ever comes out. It may be whatever it is, right? There's going to be a group of chosen ones. And those usually do incredibly well. Why? Because they're early in adoption. So I just try and do those asset allocation switches. And then I tend to then hold a smaller bag of, let's say, 10% of stupid shit, which I generally lose money in, which would be meme coins or FOMO and all of the stuff you have to deal with, right? Because you're always sitting here, even the banana zone. People don't realize the banana zone, everybody thinks that everything goes up together. It's not. 90% of the banana zone is you thinking, fuck, why don't I own that token? Why do I own this token? And you get FOMO and jealousy and greed. It's awful. But generally over time, they all ratchet up if you're in, decent stuff. But yeah.
Can you, as I say, I think there's going to be a lot of new folk that come and listen to this. Can you explain the famous bananas up for people that are coming in? A little bit cold.
So the banana zone, what I try and do is condense a huge amount of macro research and crypto research into a small meme that people can understand. And really, this is all about the global debt cycle after 2008. So I'm going to have to go back before we get to now. 2008, we blew up because of too much debt. And every major government around the world said, the answer is we're going to reset interest rates to zero so we don't have to pay the interest on the debt. They did that for 10 years and they reset all of their debts. They got their house sorted out by saying, okay, every 3 to 5 years, we'll repay our debt. And so that 3 to 5 year cycle has created the Bitcoin halving cycle. It's the same as the presidential election cycle. And it's something I call the everything code cycle. And each time we get close to that rolling of the debts, they have to debase currency by adding liquidity because there's a lot of bonds you need to issue. There's a lot of payments to be made. And that drives the crypto cycle. Crypto breaks down, as all macro does, into 4 cycles because of this massive phenomena that's been going on, which is we start with spring, which was 2023. And 4 years prior to that, so 2016, 2000, hold on, let me think about this. So 2022 was the end of winter, 23 was spring. So whatever that was, 19, and then 16. So those were the springs. And that's like spring. It's kind of, you're not sure the weather's going to be good. It might snow, might have a storm, the sun might come out. But normally prices start to rise because liquidity starts coming back into the system. Then by summer, which is this year, which was 2020, liquidity starts to flow, prices start to rise, confidence starts to build, you start to make a lot of money. And then we go into fall or autumn. That's the final year of the cycle. And that's when things tend to go bananas. It starts at the back end of the summer season, which is now. So we've been starting to see bananas, price rises and all sorts of stuff. And then next year, we get the final swoop where everything goes exponential. And that I've just called the banana zone because it looks like a banana on the chart and everything goes bananas. And it happens every 4 years. And it's kind of the biggest gift that we ever get given is this fucking thing. I remember Anson put out a post, I know it was in 2023, and he's like, I cannot believe we've been given this chance all over again. They give it to us down 75%.
Let us get away with it again.
And we do. It feels like a pre-programmed gift. It's really weird. And it works every time. Now, it won't work in perpetuity, but it will continue to work until we figure out a way of getting out the debt issue.
Yeah, it's I was thinking about it earlier, to be honest. I was just like, I was on the bike driving home, and I was just like, whoever's playing my character in this little simulation, it's like as if I just get to like do this again. And as Anson was saying, they're gonna let us get away with it once again.
And also, that if we think about one of the biggest complaints that we've had is like the gatekeepers, the power brokers, the finance system always had the advantage over us. The Web3 companies, they took our data and monetized it. And here it's been given to us. It's like the internet's been given to us and we've got tokens to make us rich out of it. It's like that's what's happening. And we're broadening this wealth. I mean, we're only a $3.5 trillion asset today. I think we're going to 100 trillion in 10 years. So we're only 3.5% of the way along the journey. This is the biggest, largest redistribution of wealth in all history. It's underway.
Do you think so with the kind of, I suppose, fractals of previous cycles of time gone by, do you think, like, let's say this cycle, if you'd been buying Solana at $8, you've played a blinder, probably a trader for, you don't really need to do anything else. You've done your job. Obviously, you might be slightly biased with the Sui trade, but what I'm kind of seeing personally, completely don't hold any Sui. People are coming in and thinking, well, where's the next Solana? Where's the catch up trade? And that's why you kind of see these weird psychological fractals get played out on the chart. Is there anything you can kind of expand on from based on that?
Well, don't forget the fractal is actually driven by the debasement cycle, the everything code cycle. So there's already a fractal that's in place. So then what we're saying is, do people do the same thing every cycle? Yeah, we're humans. We just do the same thing, which is like, okay, well, Solana's gone up a lot. What's next? But also the funding cycle of these massive blockchains means that in 2022, 2023, Sui, Celestia, a bunch of these guys raise a lot of capital. They're serious projects, so then they get developers and they do all of their kind of groundwork, building community, all of that. And then what you see is success or initial signs of success. They're still early, so you don't know, but the initial signs of success. And that's what builds momentum, because the more activity on chain, the more the value of the chain goes up. So it's all driven by something called Metcalfe's law. Metcalfe's law has had a value in network. And it's basically the number of users on the network and the total value transacted on the network. So some networks are lopsided. Doge is the most lopsided network of all, right? There's no on-chain activity. Nothing is built on it yet. Maybe X will be. But really, it's like there's a shit ton of holders. So that has this really weird, skewed Metcalfe's law valuation, but it works. Others like ETH have both. Bitcoin has a ton of value transacted because it's a very valuable network. So I look for that and look for that, what goes on. It seems that people do that because it gets attention. If some activity is happening, we're just attention monkeys. And where attention flows, money flows.
Does what a lot of people probably do in the second cycle, like the first cycle, you don't have a fucking clue what you're doing. You just throw shit at the wall and it goes up and you're a genius, and then you round trip. Second cycle, you kind of, right, I'm not going to do that again. But then I think people overthink it. So they get into this kind of position where they mid curve absolutely everything. And still probably round trip a little bit of it, to be honest. And then they buy positions that they've convinced themselves are like good technology. And it should go up based on this thesis and this narrative. Does a narrative precede price, or does price precede narrative for the most part in this space? And does that carry over to any other market as well?
Look, narrative is massive in this, and if everybody says this is a great project, it becomes a great project. It's kind of weird, but I found that price, if I kind of impute the maths behind Metcalfe's law, price is actually pretty accurate. But if you think of narrative, if people say, "Oh, whiff is the next thing," you get a bunch of attention, which brings a bunch of active users, so that drives the value up. So it's always that balance between the two. I don't know what leads what, but there's this kind of flywheel effect. And once you've got a flywheel working, okay, that's a very big deal. You know, we saw the flywheel of ETH last cycle. I mean, it just attracted so much capital because you could do so much on it. And we had two breakthroughs, which was DeFi, three stablecoins, DeFi, and NFTs. I mean, you can't ask for more. Solana, its breakthrough has been meme coins. There will be a bunch of other use cases. I mean, it's just very nice and efficient and quick to use. So you need some of those breakthroughs as well, because what they do is capture attention, then more people build on them. The foundations all give out capital to spin this flywheel. More and more people build, and it works.
Yeah, I was going to say my NFTs looked considerably way worse when the prices of them was going down. On the way up, they look like the next fucking Mona Lisa or some shit.
People, I mean, that NFT cycle was what I noticed in this space. It loves testing early stage ideas until destruction, right? It tests them, and NFTs were, okay, can we have digital ID? Can we use art on chain? Can we use smart contracts as a way of creating value, persistent value?
Mm-hmm.
So typical us lot, just speculate to fucking excess and test the infrastructure of this, and does it work? And what happened was, in the end, 99% of everything went to zero. But we stress tested the technology and we stress tested the idea. And out of this, my guess is stuff like punks will be at new all-time highs. Mm-hmm. The things that have survived will capture attention and then will have provable value. You know, I've been collecting X-Copy art and Beeple and all of this kind of stuff. So I think and then we'll use NFTs for other things. But we know they can do high velocity, massive transactions. And so we're doing the same with memes now. 99% of this space will go to zero. But out of this, we're proving what social tokens are. We're proving how blockchains can spin up an ICO in 10 seconds. We're proving all sorts of shit. And the amount of volume and velocity that goes on is stress testing the whole thing. It's bloody, it's a really clever way of using speculation to test technology. It's like incentivizing people to break everything.
Yeah, it's like, particularly the idiots in this space, me included, we want to hyper gamble, hyper speculate. So how do you satisfy that primitive urge whilst getting something of benefit to kind of society out of it? So we were seeing like a lot of DeSci stuff come onto the market last week. It's like getting people funded for experiments that they wouldn't necessarily get funded in the lab, like insert X, Y, Z reason. Like it's a pure bureaucratic nightmare, that field. But people came out poo-pooed the idea. It was like, well, it's just speculation. It's just like science meme coins. I was like, yeah, but that's the point. Like, people are speculating whether this cocktail of compounds is going to allow this specific subset of flies to survive best, like compared to a control. It ran to 150 million market cap, the coin over like 3 days. But what that did allow the the programmatic selling to do is take 150k out, which the chart never seen, and now that study's funded for the next 3 years. So
So
there's
this
these
is the,
weird incentive trade-offs that
so
happen.
we're using speculation to create capital formation. That's what financial markets are. This is just a racier version, right? But that's what all capital markets are. So we're creating capital formation, and the DeSci. I mean, I talked about it in the last cycle and said this is coming. This is a way of getting people together. A DAO is a structure by which you can get together scientists under a financial incentive structure. You could have a token. So we talked about it. Didn't happen. Now we're seeing the early stage. By next cycle, it'll be the main thing, and we see this every time. Like I've talked about NFTs for ticketing. We talked about it last cycle. We've seen some people launch this cycle. By next cycle, it'll all be NFT tickets. It just takes time. But what we're doing is testing capital formation ideas in all sorts of ways. One of the things we're looking at Real Vision is tokenized crowdsource asset management. We're a hive mind. We're all grinding, trying to stress test our ideas, form communities, do stuff. In the end, we've all done pretty well from being part of this big community, and we can completely destroy the asset management industry by decentralizing it. So there's a lot of ideas that get tested. I mean, the big thing for meme coins for me is something I was involved in from last cycle, which is social tokens. People didn't really understand it yet. Part of it is like intellectual property, brand, and culture doesn't appear on a balance sheet of a company, so it's not really valued. Like Disney, like it's like a $90 billion company. What's the cultural value of Disney? $1 trillion, $2 trillion?
Yeah.
But they haven't tokenized it. But tokenization allows you to tokenize culture and brand value and stuff like that, and it becomes a tangible on the balance sheet, not an intangible. So I've had this thesis for a while, and this is what meme coins are: is the ability to create community money and incentive systems around a commonality of purpose. So we're seeing like DeSci is some of that. We're seeing like things like Forest, which is now a charitable thing about regenerating woodlands and forests. It's this, how do we coalesce a group of like-minded people with a like-minded idea and inject capital into it? I think it's going to, when we get to an AI world and we're all sitting around thinking, what the fuck do we do here? We will find that doing what you and I do, which is being part of communities, pays. I mean, it does pay already because, community is what giving us some alpha. But if you're a Taylor Swift fan, or let's say Taylor Swift 10 years ago, and you kind of discover her, and you can get tokens or NFTs or whatever that allows you to participate in that ecosystem, and you can help it grow by telling your friends, that incentivization grows these massive networks, and people can make a lot of money. It's this concept of universal basic equity. We can participate in cultures. That is what meme coins are doing. So this is going to be much bigger than anybody understands. But trust me, in a year's time, we'll be hated online for ever talking about a meme coin. You are scammers. You deserve everything you've got. It's like they don't understand.
What was fascinating to see? Obviously, Polymarket is kind of shown how powerful a crypto product can be. Not a lot of people realize it was a crypto product, and like that found true product market fit. But what was also happening with prediction markets was you were also getting, I don't know, Trump tokens or like Joe Biden tokens, and those were kind of playing out and reacting to markets probably not as like tightly as what happened on the prediction markets because liquidity was drastically lower, but you could see if there was a debate or like someone that's came out and say something, it'd be reflected in price. So there's like this social token, no way affiliated, but there was like this collective understanding that that represents that, and that was playing out in the chart, and then went up to like I can't remember what the
Because
price was.
it's all about attention,
Exactly.
right? We're tokenizing attention. And so it so happens that it's correlated because the more Trump does something, it could have been the other way. It could have been if he was more and more ridiculous, the token may have gone up. We don't know what drives the attention. But it's the tokenization of attention. And it's actually very hard to maintain attention over periods of time. So it's like a balloon in the air. You have to keep keeping it up, which is why most of them fall apart. Except it's been amazing that Doge has managed to capture attention since 2013. I mean, fuck how? But yeah, it becomes internet folklore and then it survives. So a lot of this is how long do you keep attention? Now, if you think about, go back to the Taylor Swift idea, how long does she keep attention? Well, as long as she keeps releasing music and touring that's relevant. The moment she doesn't, unless you're full legacy band like the Rolling Stones, the attention disappears. So it's really interesting. Trading attention. I mean, who'd have thought this? If we'd have talked back 10 years ago and said, well, we're all going to be punting attention on like 3-minute charts. They're like, what are you talking about? Like, yeah, that's where we're going.
With the obviously meme coin space, I think it's just it's kind of NFTs without the pitches for me, like this time around. But do you think it's also what we were saying about, like, I suppose, socio-economic state of Middle Britain, like where we're from, like the average man on the street? Do you think it's turned into a perceived better casino for, I don't know, 20 quid bet? You're going to put it on a five-fold accumulator, or are you going to take it for a spin on Pumped Up Fun? Or do you
I
think there's
was
a bit of that
back
going
in the
on?
U. I was back in the UK. The UK is really weird. I was back in the UK 2 months ago, and like none of my friends are involved in this.
Hmm.
Nobody is. It's They are really driven by your house, what car you drive, and they might do a bit of going down to the bookies to make money. So I've not really seen Middle England even get this. They're like too fucking cynical to believe in it. Well, and the Europeans are the same. But when you go to the US and Asia, where they believe in upside, they believe in a future. They haven't had a world war in the same way that we had, that kind of crushed everybody's ability to think into the future and say everything can be amazing. Those guys really have taken to this because they like to speculate. But in the UK, it's, when I grew up, nobody bought shares. I worked in the city, but average people, they didn't buy shares. They just stuck money in their ISA, and that's all you hear. And so, yeah, I don't know, but the reality is the meme coin casino in the right part of the cycle has much better odds than the casino
Yeah, 100%.
and than sports betting and everything else generally,
Yeah,
because the
like
upside's so massive.
I I love football, but there's absolutely no way I'm putting a 5-10 team accumulator on at the weekend. I just know for a fine fact I wouldn't even put 20 quid on it. If I have no difference throwing like ridiculous money at like some shit coins, because
The other
I
thing that
kind
happens
of
with
perceive the odds
sport,
to be in my favor.
yeah, the other thing that happens in sports is you get blinded by your own support for your team.
Mm.
So you make stupid odds. But at the meme coin casino, you kind of know it's all fucking ridiculous. And so people aren't overly married to the idea.
um, so do you think we're getting to the point in the cycle now where we've obviously had that craziness? You're starting to see this really strange, what I thought was going to be a flash in the pan AI meme narrative, which seems to have like pivoted to, right, there's some serious builders here. AI agents getting deployed, they're deploying their own tokens, they're creating AI hedge funds with that ELISA repository that's on GitHub. Like, where the hell is this going? Because I think in a year or two's time, I'm going to be put out of a job. Someone who's commentated on the industry, because AI XBT can do a better job. It's quicker, it's faster, and it's got a much wider kind of
Yeah.
information pot to
This is
scout
my
from.
point again about this industry. Because capital is involved and you can make money, it hyper accelerates everything.
Hmm.
So and you had Andy on. In fact, yours was the first podcast that I saw Andy Ali,
Airy. Yeah.
and Andy realizes that the incentivization plus AI means proliferation at speed. So I think most of the AI stuff is crap right now, but what it's giving you is a signal in all of that noise that by the time we talk again in 4 years' time, it'll be like, okay, this is really happening. By 8 years' time, we've got no chance.
Yeah.
Don't forget, the closer you get to AGI, what point is there to invest in markets? Now, the good thing is that AI is at least going to use this technology for payments. You need to pay for compute, and we need to pay for electricity. So there is a reason why, and maybe profit. So if they use these rails, which is everybody's core thesis now, we should be able to just hold our tokens and they'll go up in value. But the trading we do, there's no chance we can compete with an AGI. I mean, it's 0.0 chance. So basically, we kind of get the value of the blockchains going up in line with GDP growth, which can also get crazy because of all of these new humans, which is the AI and the robots, creating growth. So it's going to be a crazy time. People don't understand how crazy this is going to get, but this is why I've got this big thesis of you've got 6 years to make as much money as possible to basically unfuck your future, because after that it becomes way weird.
Do you think
In fact, there's just for people watching this, there is, if you go to realvision.com/join, it's free, but there's a whole written piece and the video around this 6 years thesis, because it is really, really, really important. So realvision.com/join. It's just, I can't express how important it is.
Yeah, we'll leave it in the show notes as well. I've heard you speak about it numerous times. It scares the shit out of me, but also kind of motivates me to go on.
That's the point.
Yeah,
That's the point. Is you
do
need
the
to be
best in the
fucking
market.
scared because we don't know what it means. It's not like it's a doom and we're all out in the streets with nothing to do. It's like we just don't know how things work. So really, we've got 6 years to buy the house that you want, to get the security that you want. We don't even know what money is going to be in 20 years' time in a world of total abundance. I don't even know what it is. But now's the time to set up your life where it doesn't matter. And we've got the opportunity. So, everyone just needs to focus on it and not fuck up.
If you were to put a plus and minus on that, what would you? A year, 2 years?
I think 2 years is the most I assume I'm wrong by. So 2032, maybe even 2034. But at the speed that things are happening, this exponential age of technology, everything's doing this. The IQ of AI is like doubling every year. So if it's 120 now, which is more than the average human, it'll be 240 by next year, 480 by the year after, 1,000. Really? We've created God. We've created gods.
Did you see this experiment of? I think it was called Fraser. So it was like a AI agent, and it had a vault attached to it, and then people were paying incremental amounts that went up to try and convince the AI agent to part ways with the funds that people were paying into the vault.
That's
And then
right. Yeah.
someone cracked it at 50K, like some mad boffin, like managed to convince the AI to part ways with the money and trick it into handing over the keys, which is just batshit crazy. Like, that was this week. Like, I just
But that's another thing showing you how we will amuse ourselves in an AI world doing all sorts of stupid shit, right? Tricking the AI is one of them. Whatever, who knows, right? Nobody would have thought we'd be punting on pictures of a hippo 10 years ago. Right? Nobody thought this, and nobody thinks any of this is coming until it comes. But what we're doing is we're adapting as people to a changing set of circumstances, which is like, well, we can't get up the housing ladder, can't do this, can't do that. My job feels like a dead end. My salary doesn't go up. How do I make money? And then, well, technology is going to replace me out of a job. And before you know it, we've adapted before it happens.
yeah, there's people like I just turned 31, and my kind of everyone I went to university with, either pissed off around the world to go and traveling, or a lot of them have headed from up north down to London, paying 600 grand for a 1 or 2 bedroom flat, commuting into
Way
work.
outside of centre
Yeah,
London, right?
yeah, and it's just like you either go to work, both of you, on a decently paid job because you've also in 80 grand's worth of university debt, or you decide if you want to have a kid and have a family. No real in between because you're definitely not affording childcare. So the whole situation is completely fucked. And
Yeah,
the
and if
UK
you remember when
well.
I bought my first flat in London when I was 28, and I was working in finance, and it was a really nice flat in Bayswater. 2-bedroom flat, ground floor and basement, overlooking a square, good area, really nice. Yeah, I was earning decent money, but it cost me 3.5 times my salary.
Hmm.
If I were to look at the same thing now and take a 28-year-old investment banker's salary and look at that value of that apartment now, that flat, it's probably 10 times salary.
Yeah.
10 times your salary. How do you raise the deposit?
I don't know.
Well, that's
I
why
don't
you're
think.
living in Bali. I mean, it's like, but this is what everybody's doing. Is you have to go for the lifestyle arbitrage. I learned this. I left the city in 2004, 5. I moved to Spain.
Yeah.
And my savings, because I kind of semi-retired at that point, my savings were worth 3 times as much money as they were in London. You know, I ended up selling a 3-bedroom, like penthouse flat in Bayswater again, near Hyde Park, and bought a 5-bedroom house on 10 acres of land in a national park 10 minutes from the beach in Spain. Well,
Someone
okay,
does not.
that was a big arbitrage. And life was better. It cost nothing. When I went out for dinner, you know, nothing costs anything. And it's like, wow.
Yeah, I know. I feel like we've got a little bit of a cheat code at times, but
Yeah, but, you know, I go back to England and see my mates who aren't. It's like, it's all the fucking house and the car and the holiday. That's it. Their entire lives is the house, the car, the holiday.
yeah, nothing changes, does it? Like, you come back and it's NPC saying the
It
same
really
sentence.
is NPC. It really is. And it's sad. It's lost its competitive edge. The people just don't feel like they deserve success. It's really weird.
Yeah, and I don't know if it's like where you're from, but where I'm from in the UK, it's like this crabs in a bucket mentality. If like someone's getting out, they'll do everything they can from through spite to kind of like drag you back down. And it just feels like it's nobody's like wanting people to succeed. And then I suppose when you move further afield and you kind of get into a melting pot of cultures and everyone's like doing their own thing and the introductions that you get made to like this guy's building an AI project, this guy's like building this new crypto project, blah blah blah. It's just like I think traveling for me personally has just opened up so many opportunities and opened up so many horizons. And then, as I say, with the Geo-Arbitrage for like being able to have an amazing life from cost of living and stuff like that, it's I recommend it to anyone who's listening.
Yeah, I'm the same. I mean, Spain was great, but I left Spain because it was missing that edge. And I was like, I'm getting a bit bored. People are not really entrepreneurs. The quality of life is probably the best in the world.
Yeah,
But I was like, I'm a bit bored here. Coming to the Cayman Islands, you know, it was not a lifestyle arbitrage in terms of cost or anything else. It's so much more expensive. Yeah, you don't pay tax, but everything is expensive. It's like shopping in Harrods every time you go to the supermarket. But the people here are entrepreneurs,
yeah,
risk takers, interesting people. And that whole US gravity, I mean, you know, Americans are much bigger risk takers, entrepreneurs. They're more engaged. They're less cynical. And it's the same when you get to Asia as well. You know, you can feel it when you're in Singapore. You can feel it. It's
mm.
everywhere.
So just to wrap up, I know we've kind of mentioned like kind of fractals with cycles, but where where do you think we are in this cycle? I think a lot of people are scared in because they haven't made any money and they don't want it to be the top. I don't think we're anywhere near the top. I think like the election was probably at the start of like a very aggressive cycle. A lot of people have shit on me for saying that, but I'd love to kind of pick your brain on where you think we are.
Okay, the issue being it depends what kind of crypto birth year you're from, right?
17.
You're class of 17, right? So what happened most class of 17 people is they got utterly fucked by 2021 because that last leg was short, right? Everyone thought, right, here we go, then the final big blow off, and it didn't happen. Anybody who was 2013, they got 13 and 17, and then they'd made enough money that didn't really matter by 2021. They sorted their shit out. So people have a huge amount of PTSD, massive. And that is influencing people to want to sell early. Because they're like, I'm not going to round trip this again. I'm not going to round trip this again. So I think, probabilistically speaking, a lot of people are going to get out like I did in 2013 in that March-April period. Because we probably get a ramp up into that, because that's how the cycle evolves. And then a lot of people will get out. The market falls, it's tax season, people have to sell some stuff. And then if it ramps up because of this new government and all the things going on, and then it ramps into the end of the year, everyone's going to be caught off sides and they'll be panicking back in. And this is where you make mistakes, right? All of this is where you make mistakes. So it feels and looks to me much more like a repeat of 2017 that we're about to set up for. Now, I could be wrong. I don't think I'll change my stance. I'll take some lifestyle chips off in the first quarter. But, the way to make real money in this is to stay in. And in the bear market, buy more. Mm-hmm. It's like, Jeff Bezos doesn't trade around his fucking stock. I mean, I was in Silicon Valley hanging out with a mate of mine, and he was he bought Bitcoin at $3 and bought a lot of it. He's worth billions of dollars. I'm like, do you trade it? He's like, no, I don't do anything. Why would I do that? But we've got this head, the cycle. Oh my God, my cycle, because we've got this PTSD. So anyway, it's all going to come down to liquidity, because liquidity is the dominant factor. What was unusual about 2021 was liquidity peaked early, because they jammed it in 2020 and then they started taking it out. And it peaked in March. Normally, liquidity peaks in August, September, October, November, which is why the cycles are longer. So that's all I think we need to know, is when does the business cycle peak? That's the other thing. I use the ISM survey. When that peaks, the market usually peaks around that. We haven't even got off the bottom yet. So we're still, the ISM is below 50, which means most of the economy is still not even really functioning yet. So we're a long way from this. But I understand people have PTSD, which is like, the best answer for that is take some lifestyle chips off on the journey, but don't trade your whole bag, and try and think in multiple year time horizons. Think about this 2030 time horizon. Say, listen, I've got to be in the technology. I'm going to have drawdowns. I'm not going to do stupid shit. I'm not going to be 100% in meme coins at the end of the cycle. That whole don't fuck this up thesis. Just be sensible. Everyone will be fine. And if it does have a massive blow-off cycle, sure, you can take some more off. But, I just don't think trade the cycle.
Like, just one final one. Because there is such a high amount of new coins that are coming onto the market, so much kind of emerging tech that hasn't really been battle tested, hasn't been through like prior cycles. Is there any merit in the whole holding through multiple cycles? Is what assets would you put in that category that you'd feel comfortable doing that with? Because for me, there's probably 3: Bitcoin, Solana, and ETH. That's about it.
Correct. And if you're really just going to reduce risk and hold, just Bitcoin.
Yeah.
Or ETH plus staking yield,
Yeah.
But don't fuck around with this other stuff. Your chosen token, this is going to be the one. Probably isn't. The easiest trade is the second cycle trade. The Solana this time around, has it done well? Is the community still there? Does the price start performing in outright terms, and then versus ETH and Bitcoin? Yeah, that's the trade. The trade is not to be brave in the bear market and hold the riskiest stuff all the way down. Because it goes down 99.9% half the time. I mean, Solana did. Solana was
$8 Solana was a bit scary.
97.5%.
Yeah.
We all went through that. That was a hell of a drawdown, and it still worked.
Well, Raoul, thanks so much for your time. I really appreciate you doing that. I've been watching you for a lot of years now, and I'm sure a lot of people have got a lot from that. So, thanks so much, mate. I really appreciate you coming on. And we'll leave all the links below. Go and read the 2030. Yeah, you've got
Yeah, that's right. I can't express how important it is, and it should frame people, as you said. It should scare the shit out of you, but also motivate you to focus on what is at hand.
100%. Right. See you next time, everyone. And if you haven't subscribed yet, I don't know what you're up to, but yeah, just do us a favor and hit that like and subscribe, and we'll see you next time. Over and out. Bye.
Quick one, nothing here is financial advice. It's for entertainment and educational purposes only. Always do your own research or speak to a financial advisor before making any investment decisions.